Oh, yes, legends. Hope you're doing absolutely fantastic. Had a great weekend, legends. We'll be analyzing the situation today, Sunday, getting ready. We are at the point of control of the range at the moment, which we are getting a reaction. Is this the moment that we do reject, or do we pop out and get continuation to the upside, guys? Let me know in the comment section. What do you think is going to happen here for the price of Bitcoin? Let's go say hello to everybody here and see what's going on, okay? We'll be analyzing the situation here all together. Yo. Hope you had a fantastic weekend, everybody, okay? I got some stuff ready. We had a busy weekend. And just taking a look at the charts now throughout the last couple of hours, and we do have some scenarios that look very interesting, okay? Big up Andy and all legends. Hope you guys have a fantastic day. You too, my man. Hamad, much love to you. Let's go. John, much love to you, brother. Yo, Sad, how are you doing? Philip, hi guys. Hi Andy. Much love. Alex, DeFi Diva, Katri Lucky. Hi, sir. I am new here. Love from India. Much love to you. Yo, Big Dun 2512. How are you doing? Baby Genius is here. Let's go. Andy Hermano, let's get it. Good morning, Andy and friends. Maku, much love. I'm here to learn and not to give financial advice, bro. Breakout it is to the upside. Bath Maria Vallejos, much love to you. Andy greets from Belgium. Absolutely awesome. Good morning, Andy and gang, says Dak Bick. How are you doing, my man? Nice to see you around. My volume center is 87.5. Ricky, much love. Legend, always working. Mike, much love to you, my man. Thank you for joining. Why is everyone so bullish on Twitter? Lol, it's a small move. We're kind of still in the range, right? We're still in the range highs. So yeah, I mean, I have to say, we are at resistance at the moment. Hi, everyone. Greeting from Sri Lanka. Absolutely awesome. From Sri Lanka. Sri Lanka's in the house. We are at resistance. We did get a little rejection here from this low part of the fair value gap. We did reject ever so slightly. We're going to take a look at that right away. Okay, there was a small little rejection from this fair value gap, the golden pocket from the highs to the lows. From this high right over here to this low, as we can see, the 61865 golden pocket. Hang on a minute. Tradingview going a little bit crazy here. First of all, before we start, guys, I need to be very clear with this content that is provided here on YouTube, which is not financial advice, okay? Only and is not financial advice. The information provided is not guaranteed to be accurate or complete. Always conduct your own research before making any financial decision, guys. Not financial advice. This content is only for educational purposes. So going through the different scenarios that I'm going to take a look at here with you guys. Make sure to wrap it up. I've just checked the charts the last couple of hours. Okay, I wanted to do a stream because there are a few levels and a few scenarios that I want to go through. It's over for the bears, says Axel. Pump it is, right? Yeah, we're going to go through a few scenarios. We're pumping into a weekend pump, and then we're going to talk about the CME gap, of course. Very small one, okay? Not that we haven't pumped massively throughout the weekend, but we do have that CME gap around about $90,000, right? That's where we did close Friday. So there is a little bit of a gap here, obviously, that is going to be formed if the price still continues in this range. So there will be a gap open if the price continues here throughout the next coming hours. Opening on Monday, there's going to be a CME gap. You know what they say about the Sunday pump, and you know the gap needs to be filled. I am not a fan of this. I've seen gaps being left behind and we continue pumping, and then maybe later on after a few days we end up filling the gap. Okay, so it has nothing to do, you know, I've seen gaps that have been left behind, and some gaps get filled straight away on Monday open. Okay, so it's something that we need to consider. We did close on Friday at 90k region, so there is a little bit of gap here, which usually provides support after filling the gap. Okay, so let's discuss a little bit of where we are at the moment, right? Very strong, choppy range, not strong trend. There's no trend here really. either to the downside or to the upside. Overall higher time frame trend is down, but on the daily the trend is up, right? We're in a big range for many weeks at the moment, and it kind of wants to squeeze to the upside, right? We were wanting to try to squeeze to the upside here. The resistance are getting resistance, okay? The resistance areas are getting a reaction. Is it enough though to actually get the pullback? Because here, this is the thing about shorting the zone. I'm happy to short and try to catch a high if I can manage risk and I can see the reaction, okay? It's all good, right? Because if you do not catch the highs at certain resistance levels, this was an okay region to short. We explained this on Friday. Guys, we're hitting the fair value gap low. We're hitting the golden pocket, right? We do not enter a short down here on the rejection, right? If we moved down from here, I have to say, I'm kind of not interested in getting into a short. We're still moving up trending. So it doesn't make sense for me, obviously, to get into the short if I'm not getting into shorts on resistance here. We would have to wait for a market structure change where we do get an impulsive move to the downside, right? Such as a 1, 2, 3, 4, 5, right? And then a very corrective choppy bounce. Then it would be looking interesting, of course, to participate into the short. That is not the case. Market structure throughout the last week is quite bullish. So if you are attempting shorts, you have to look at the levels of resistance, kind of SFPs. We got that point of control. The reaction is there. The stop losses are very small if you are catching these rejections at these levels, 91.5k, right? 91.6, which is where we're getting the reaction here on this point of control of this range. So I have to say that low callable tops are acceptable here to get in as well. So if the price does manage, okay, let's just get the volume point of control here of this range. If the price attempts to break the recent highs, I have to say that a local double top here is acceptable. If I'm around, I will attempt that short if we get the highs taken recently and we get the rejection, just because this is such a crucial level of resistance eventually, and you know, it might pop out. If it pops out, our next major level is a point of control at 92.3. As explained, like on Friday, I am not interested in attempting any short positions between the levels of resistance. On Friday, I was not interested in a short inside of the fair value gap, guys. This is a zone where the price can, if it does not reject from here, I'm not interested in any shorts inside of this area. The next level where I could be interested, depending on the reaction, managing risk very well, is that 91.5k level where we do have the point of control. Fair value gap, guys. Why am I not interested in shorting here in between 90.7k and 91.5k? Because of the fair value gap. What happened? We sliced through that level. You can see the price action. This is the main reason why I'm not interested to, you know, bash my head against the table saying, oh, it's going to reverse, it's going to reverse. If we break through this level, I'm sitting on my hands till we get to the next level of resistance, which is this 91.5k, which we are getting the reaction. The problem is no selling pressure. It is the weekend. Could we open Monday with a little bit of a dump down? Okay, that is possible. But yeah, this is basically the next level of resistance that we mentioned. So there's 90.7k SFP, that's all good, all nice. If we break that level, our next major level of resistance is coming in at 91.5. So we are sitting at this zone. So you might think, well, you know, should I get into the short now? Do we get into a short? Are we going to break higher? Right, that's the main questions that most are gonna ask here at this reaction, right? That we are getting at the point of control of the range, because the point of control of the range is reacting. We can see that. The movement's down. I'm going to tell you one thing. If we take out this high, get very close to it in the next coming hours, I'm not interested in any shorts here in this zone. Not interested. And the main reason why, because this would be a corrective structure, another corrective structure to the downside. Does this have the potential of forming a 1-2, 1-2, and we roll over in a third wave? Absolutely, as long as we maintain below this lower high, which is at 91.6k, that would be like the break even or the tight stop loss if you entered here somewhere in this region, or maybe you entered here as a short somewhere in this zone. I would say that instead of having stop loss above the high, it's enough to have a stop loss here. And that's just understanding the information that we got throughout the last few hours. If we take out this high, the probabilities increase to take out this high, and then we'll understand what comes next. Why, if we take out this high, we're likely going to take out this high? Because this will automatically convert into a high probability three-wave structure. Okay, which means, yeah, we're probably looking at the pop out here to get above this zone. Will this area get a swing failure pattern and then correct down? Well, we're going to have to see, right? Because where it becomes interesting to short is not here, it's actually here, right? That's where it becomes interesting, on the rejection. If we do not reject, we go to the next major level of resistance, and then I would be interested in attempting. I'm not going to like short, add to the short, stop loss goes higher. It's a game that you need to be very, very planned on your setups, right? I know exactly what I'm looking at here to enter safely on my positions, right? Because a lot of people are just going to be like short. The people that are bearish, okay? I'm not bearish, I'm not bullish, I'm neutral. I'm a trader. I'm looking for certain levels, certain formations, understand the risk, and obviously apply my risk management with that. So I understand that the price could blast off, go to much higher levels, pump another $1,000 easily. Why not? I don't, the market structure is bullish. We are at resistance, so I do have a reason to believe that this could be a topping range. It's all about the execution. Where do I execute? How do I manage risk? How do I know that I'm losing probabilities on the setup? Well, for the moment, this could be a correction. It could be double 1-2. I'm gonna give it a chance eventually, because I am short in this region, but my stop loss is above this high. Okay, so still on the long partially of Friday. Friday we did get a nice little move down, possible long position. I know we were coming into some levels of resistance, getting some reactions here. However, acceptable long on this pullback, I have to say, because if we're still maintaining bullish market structure, the S&P 500 was forming a double bottom, so we decided a long here into golden pocket 7-8 to test the highs was an option, and maybe get continuation to the upside eventually, which is what's happened throughout the weekend. So we're going to do a little bit of higher time frame analysis, okay? Even though I know the 50-minute is where we have the excitement. Where do we analyze the entries, the longs, the shorts? I have to say, if we take out this high, I think we could eventually take out this one. There'll be high probability in taking out this high. This would automatically look very, very three-wavy. Of course, there's the ABC flat scenario. But as we are uptrending locally, there's no major signs that we are going to reject eventually. I mean, there is the resistance zone, which is this one. But yeah, I would not want to be in a short or add to the short position if we take out this high. I would only wait for the double top at this pivot high. And if we do not double top from this pivot, Then eventually we break out, boom, no double top, we maintain above the level. Then the next major level would be 92.3k, which is sitting here where we have a naked point of control from the little consolidation that we had right over here. Now, I mean, this is an area that eventually, you know, price could just pop out, right? It could just, if we do open up bullish, we do have those highs right there at 94.5k. So it is a zone that we don't need to be like super bearish and just say it's going to reject. We got so much liquidity, there's no way that the price is going to go up to 95k. We need to accept that that is very much possible, right? That is very much a possibility. Why not? So I want to be very, very cautious and manage risk. Of course, when and if the rejection does happen, I would expect a pretty sharp rejection here. Pretty sharp one that could eventually come all the way down back to the lows of the range. That is where we have that massive liquidity pocket just below 86.6k, right? There's a few 100 million long liquidations up there. Still plenty of liquidity to the upside. So there's, you know, we are uptrending. There's no reasons to say this is the top. It's gonna move to lower prices. Okay, so want to be extremely cautious with the possibility of moving up from here to literally take out the highs here of the range at 94.5k. So this is the thing though, right? Because, you know, maybe throughout the next 24 hours, the price does reject at one of these certain levels, right? Say that the price maybe rolls over from here, or maybe takes out 92.6k, 92.4k, sorry, which is on my next level here of resistance. That level, I'm going to treat it as an SFB zone, okay? Like tap the level, reaction, maybe look for the short, no reaction, we just go higher. Running out a little bit of resistance levels, I have to say, in this zone. You know, you just can only rely on Fibonacci at this point from this high to the low. So 7-8 Fibonacci, that's the good thing about this 92.4k level, which we do have a small naked point of control. It's not a massive level, but it is in confluence with the 7-8 Fibonacci from this movement down. So golden pocket got a little reaction, little move down of $1,000. It's still a reaction, still a rejection, but we ended up moving up here throughout Sunday into this next level of resistance, which we are dancing around at the moment. So 7-8 Fibonacci would be the next one, okay, which is sitting at $92,400, where we have that naked point of control. Want to be a little bit defensive, of course, with the shorts. It's really nice to get into the Pico top of a short position, right? But you just need to be extremely defensive with your risk management, because we are uptrending, we are at resistance, trying to catch that resistance high to get into the short. You just need to manage risk, right? Because the people that are getting into shorts, adding to shorts, and you know, average entry might be in this zone, they've already risked significant amount of their capital. That is not the way, okay? That is not the way. Now you're overexposed underwater and you're hoping for a reversal. Keep the levels as resistance, as your guidelines, where you want to enter with tight stop loss. The moment the price does decide to reverse, it's going to pay off your tiny stop loss, right? Super important to understand that, because I know people, I get DMs every week of people, you know, I'm underwater here, I'm underwater there. And I'm like, damn, you know, you just need to get stopped out or out of the position, right? If you are attempting any shorts or any longs, don't add up into massive positions that you're getting overexposed to the market. Okay, so yeah, that's a little bit of what we got at the moment. We are at resistance, we are dancing around. We will be having a CME gap unless we reject in the next coming hours, coming down to the 90k level to Friday close levels, right? Then the CME gap, we won't have a gap basically, if that is the case, if we were to roll down to the 90k levels in the next coming hours, which is relatively interesting. Of course, we could flip all of this area into support as well. I have to say, this is why if we do reject from here, I'm not kind of interested in jumping into a short, because we still, you know, it could be just a correction, right? And then the market decides to rally back up. So not interested in shorts on the movement down here. We would have to get a pretty solid move down. You're either shorting from here, or if you move down strongly, say that we have a double 1-2 here, bang, wave 3, we start moving down in a 4-5, we can see a clear impulse. Then the bounce, of course, could be relatively interesting to look for the short position. But not shorting here on the first move down eventually. That would not be a great idea. So it's either shorting the resistance highs with good risk management, or wait for the impulsive move down that looks pretty strong, and where we have a very, very choppy corrective bounce, okay, after a few hours of getting that movement down, consider the short. There's just no other option, right, to look for the shorts, in my opinion, understanding that we could continue to the upside. So, yeah, we just want to be careful with the shorts, right? It is lucrative, of course, because everybody's, everybody that is bearish, the bulls are just going to say that we're going to go up to 95k. But the bears, what they want to expect is, you know, move up, and wait, look, you know, expect this movement down, right? People want to see it's going to crash. It's going to crash. This could just build up and build up and build up. We head up to 93k, head up to 95k, and, you know, we just literally just continue this bullish market structure. So we want to be defensive with the shorts eventually, right? There's no, we don't have anything on the chart at the moment that it tells us that this is going to be the top, right? We are hitting resistance, so it could be the top, and that's how, you know, we get into a short, managing risk very, very well, to see if we do get that movement to the downside. Let's go through the comment section about the liquidity. Plenty of liquidity, I have to say, still at 92 and 93k, so there is lots of short liquidations up there, people having their stop losses and their liquidations in basically 92, 93k zone. Okay, there's just plenty of liquidity here to the upside. So my liquidity is down here. I'm putting the tight stop losses on my entries on the rejection of that range point of control. Okay, which is a good zone to attempt. I have to say it is a good zone. The reaction is there. Could we be building bearish structure here? That's the thing, right? This is how you need to attempt the possible double 1-2s to the downside, right? Because then what happens on a reversal, literally, if this were to be the high, this could be a lower high, and then you get the movement down in a wave 3, and then 4, 5, right? And 4 and 5. And then you're like, oh, you know, I missed the short, right? You know, how could I have identified that, you know, this was going to top out in this region? Well, number one thing is that it is the range of the point of control, and the reaction is there, right? So you did get that failed breakout to the upside, and then another local double top, which was a decent attempt, then the back test, and now moving down. Entry zone is at the level, just beneath the level. This is the entry zone. And if the market structure does not continue forming lower highs and rolls over from here, I do not want to be exposed in that short if we do take out 91.6k. That's literally where my stop is from the entry point that I have on my position. So still having some of that long to hedge and pay off a little bit of the short attempts, which is totally fine. This is what we do. Look for longs, look for shorts, leave some open so I can actually pay off my short attempts inside of the market, right? So it's another good way to be defensive when we're looking to get into a trade position, right? If I'm looking for shorts, at certain levels of resistance, it makes sense that if you are long from anywhere in this region, to maintain a significant chunk just to pay off the potential losses of your short attempts, right? Which is the beauty about trading, right? About hedging against the position. Anyway, let's go right away through the comment section. DeFi Diva, how are you doing? Much love. Hope you're well. Andy, Happy New Year. Merry Christmas. God bless, homie. Alexo Crypto, guys, go and check this guy out. He does live scalping every day, Monday to Friday on his channel. He's an absolute awesome guy. He uses a lot of VWAP, Golden Pocket, order blocks. Great scalper. He does live scalping every day on his channel, guys. Go and check out Alexo Crypto. Shout out to you, my man. Much love. Looking good, Andy. Thank you very much. Jackie Wood Mother always giving love and support. I'm looking forward to the short squeeze. Yes. Andy, it definitely a possibility. The whole range looks like a huge Adam and Eve double bottom. The whole range looks like a huge Adam and Eve double bottom. Adam and Eve double bottom. I'm not sure if you are looking at this as the Adam and this the Eve. A little bit shallow here on the right bottom. Would be nice to go a little bit lower. I'm not sure if I would consider this the Eve bottom right there. But yeah. So Bitcoin at resistance. Bitcoin at resistance on the higher time frame. We are still very much rangy. If we do consider Elliott wave theory here, we got a lot of scenarios. It is true that we are at a zone where we've swept the liquidity of the range highs of the last 2 weeks, right? So we got above this zone, which is already squeezing some shorts, okay? We have seen the liquidation here throughout the weekend, throughout Friday and part of the weekend. Hundreds of millions of short liquidations have been liquidated already in the last 2 days. So, you know, obviously it's a liquidity game at the end of the day, right? Liquidity game. Still plenty of liquidity to the upside, which is disturbing, of course, to get still continuation to the upside. But lots of long liquidations, okay? There is heavy longs at 86, 87K zone, all right? Which eventually, it's a liquidity game, okay? We need to understand that it is a liquidity game. And just because we have a little bit of local market structure that is bullish, doesn't mean that we're going to absolutely pop and go to Valhalla, right? So interesting area where we at, okay? If we do get the entire range since November, we are at the Valley area high as well, right? We are at that high volume node. So it's a zone that we want to be a little bit cautious. We do have that yearly level as well, new yearly level. Okay, obviously with the close of the year 2025, when we do go to the yearly chart, we can see that we do have that yearly level, right? With the opening of 2026. Opening of 2026 has been bullish throughout the last few days. And we can see that yearly level is at 93.3K. Okay. The close of the close of 2024 and the open of 2025. We're literally at the same level for over a year now. Same zone on Bitcoin since you know, a year ago, which is over a year ago actually. Over a year ago. Yeah, I would say about 14 to 15 months. Bitcoin has been trading in this area. You know, if we go here with November of 2024, so it's been over 13 months in between 80K and 120K, so it seems like we haven't gone very far away, right? So that yearly level is sitting here at 93.3K. We did get resistance on that yearly level. It wasn't a yearly level because this was December, but now with January, with the opening of 2026, it's a confirmed yearly level. So, you know, we do have fake out possibilities of the value area high of this entire range. There is some fake out possibilities. I'm going to be very, very specific with my entries on these levels. Okay, I'm going to treat them as rejection levels, SFPs levels. Okay, so you get to the level, if you reject, just like this one over here, you know, I have to say it's a valid attempt. The reaction at the point of control, this high volume node, is a valid attempt. The reaction is there. You just need to enter quite high and manage risk. If we pop out from this level, only two levels that I would consider, and I would be a little bit cautious of the price actually popping out here to get to 94.5. This is a zone that you need to manage risk if you are attempting any shorts like an absolute machine, right? Like an absolute beast. Because there is danger eventually. There is the short squeeze danger. There is liquidity above 94.5k. But I have to say, I'm not interested in any longs where we are at the moment. Long should have been taken throughout a few days ago, maybe on Friday. On these pullback attempts was acceptable to get into the short as well, into the long, sorry. You want to get into the pullback, not longing at resistance, and these pullbacks that we're getting are not enough for a risk to reward for me to get into a long. So let's just double check here where we do have the CME futures gap, and we're gonna talk about that gap right now, of course. So yeah, the gap is coming down 90.5k on the CME, which is not the same, of course, from the regular charts on exchanges. 90.5. So we got that rejection here after hitting the highs of the range. Okay, let me just double check that level here, because the gap, after the gap being filled, yeah, so the gap would be coming down here at this region, round about this zone. That's where we do have the gap, just under 90k. Just under $90,000 is where we do have that CME gap. This inevitably is going to possibly be some support. It could be interesting to actually look for a long position in that area if we do see some proof of support. Let's see. Yeah, the good thing about this area is that we do have obviously all of the highs from the last 2 weeks, right? So you could attempt to move lower from this zone. You got all of those highs right there, which is natural to attempt to go beneath the level, fill the CME gap, and then look for the possible bounce. It could be interesting maybe for a long position after filling the gap. Okay, we need to look at the CME. Basically, I don't think we're going to come down now. I mean, we could, but I would wait for the open eventually, check the BTC CME futures chart, and then obviously watch carefully for that gap. Okay, now that obviously the price is trading somewhere on the CME around about the 92k level, right? Staying because we are around about this area. So the price is trading around about 92.6 at the moment on CME. So there is a bit of a significant gap eventually on the CME. So we are going to open somewhere in this region, because that's only in a few hours from now. We're going to have to watch the CME. I'm not a fan of saying we need to fill the gap. I'm just interested on the gap is actually support. When you fill a gap on the CME, it fills it, and it actually, most of the times, it does provide support. So it's something that we want to watch out here to consider a long position, right? And these longs on pullbacks I know a lot of people would be like, I'm actually more happy on a bigger rejection here to happen, right? I don't want a longer pullback right now because it could actually, lose the entire local structure that we have to the upside. But this is like longing on Friday on this correction, right? There are longs available inside of the bullish market structure. So CME usually does provide support, the gap, okay, once it's filled. Something that I'm going to consider, because I would say, I can't say that we are going to reject. We need to come and claim this liquidity beneath these lows. I'm not longing. I'm only looking for shorts. Absolutely not. I actually could be interested in a long position in this zone, just below $90,000. I'll be paying attention to the CME gap on the CME futures chart here, which is the BTC1 chart, guys, and just pay attention to that gap to once it's hit, possibly filled, could be quite interesting to see that proof of support. So yeah, that's a little bit of what we got here based on local support, because you might think, do I long now? Am I looking for longs? Shorts are looking more interesting at the resistance that we are at. We're going to use a little bit of Elliott wave theory at the moment to see what possibilities do we have regarding the movements or looking at Elliott wave. Very complex, I have to say. Not everybody likes it, especially when there's so many scenarios here. There is a lot of scenarios. So now we're just doing a level to level, right? Kind of stream, levels of interest. How I'm looking to get into my trades. Just as I said, I am in that position on the short. Very, very tight stop loss. Good entry. Stop loss is at 91.6. It's just I don't see a reason why I want to be in that short. If we take that last lower high, for me it's just not worth it. I think we're going to take out the local highs, and then maybe if we do reject from this local pivot high, I will consider a re-entry only on a rejection, but stop loss is in place based on, is this movement down corrective? And if we do hit 91.6k, I'm going to favor that it is corrective, and we're going to test the highs at 91.8 and maybe break out to get above 92, maybe 93, right? Who knows on the breakout. So double top is going to be, if I'm awake and I'm around, I will attempt a local double top because it is at resistance. We are at resistance. It's the value area high of this entire range since November. It's this range point of control without counting the price action of the last week. So that high volume node, I mean, it is there. We are at this zone. It is getting a reaction. It was part of the plan. I entered into the part of the plan. I'm managing risk very, very well. Hedging as well against the long position from Friday. And, just take it from there. If we take out the highs, we're going to have to see. We might take out the highs here on stream. If the market wants to get the rejection, I can enter. I can manage risk. And until the price, if it does or it doesn't, get the proper rejection down, right? And then eventually, that's the one that is making the bank. Will we get it? Well, for sure, it's worth some attempts. That is for sure. If you know how to manage risk. If you manage risk, I got 100 bullets, right? Of course, if you are going all in or going very heavy, you only have 3 or 4 bullets, right? So it's all about risk management. If you manage risk, you have as many attempts as you want at certain resistance levels. Okay, just be very, I'm tight with stop losses. I'm very, very good with risk. The one that it does roll over, which we might not get, I have to be honest with that. So this is why I'm not going to be bashing my head of short. I'm adding to my shorts. I'm only short. I'm actually interested in a long if we do fill the CME gap throughout Monday. And if we break to higher levels, then up we go. And that's it. Very, very, very controlled short positions, okay? Very, very controlled. Only certain specific levels that I would be interested. The yearly open is kind of an interesting one. yearly open, yearly level basically, is kind of an interesting one because it's coming in at the 0.88 Fibonacci from the highs of the range to the lows of the range. 93.4 is kind of an interesting one. There's only two levels here that I would attempt if we break the recent highs, as mentioned. 7.8 Fibonacci from this movement down with a little range. Okay, we got a naked point of control right there, as you can see, from the 12th of December, which was a Friday. This little range provided a high volume node on the volume profile or the session volume profile or TPO chart, whatever. You know, you got a little high volume node, which is a naked point of control right there, as you can see on the chart. So that is sitting in at the 7.8 Fibonacci. And I am a fan of range highs or range lows fake outs. They do happen. Range low fake outs, okay, valley area low, they do happen, which it looks like you're breaking the valley area high or the valley area low, and it's not breaking out really, it's a fake out. So valley area low here, we did get some fake out attempts reversed. I would consider still the valley area high faking out of this range from November and December. You know, I'm really happy to attempt these you know, these shorts, just like attempting longs here in this zone of the valley area low. You know, if you're still holding that from a few weeks ago, you know, at the end of the day, it's a $6,000 move. You know, we think these moves are massive, but they're not that big actually. It's been a very boring range, I have to say. Only day trades of, you know, 2,000, 3,000. If you catch the $3,000 move in the last 2-3 weeks, you were kind of lucky because, you know, we just had very small movements between, you know, $1,000 and $2,000, right? So it's been a day trading area, really small movements that have happened. Even this move from the low of last week is just $4,000, right? It's not massive. So yeah, I mean, I would say that two levels of interest that I'm looking at. Then obviously we're going to combine it with Elliott wave theory, because there is it's actually a very interesting area to get that rejection when we combine Elliott wave theory. I'll go through this different scenarios, of course, right now, to maybe get the pullback and sweep up at least these higher lows, with the potential of this low also at 94.5k. But for the moment, we're moving up. We are uptrending locally here. We just need to be, you know, very specific at the zones of entry, right? Nothing else. There's nothing else. I don't have a crystal ball. I got crystal balls, but not a crystal ball. And you know, I don't know exactly what's going to happen, but I know how to execute the trades and manage risk. You know, I know where to enter. I know where to put stop loss. And the moment it does roll over, if it does, then eventually, you know, we're in the trade. So only two levels left to the upside of my interest, because if you smash through all of these levels, it's inevitable that we would be looking at getting above 94.6k, which is the range highs. But there are, you know, I got a few bullets here. I got a few attempts managing risk. You know, a lot of these trades could be stopped out close to break even, which is very good eventually, which gives you more bullets, right, to attempt the short. So this one right over here, naked point of control and the 7.8 Fibonacci from this movement down, 92.4k, and the 0.888, which I like to call the second golden pocket. 0.88 is a very respected Fibonacci level. I would say it's the second most respected fib level after the golden pocket, which is the 61865 zone. The 0.88 is magical a lot of the times, and the 0.88 is exactly where we have a yearly level, guys. The yearly close, right, and open from 24 and 25 is literally at 93,350, which is with a 0.88 Fibonacci. I really like that level. This is one of those levels that I do see it rejecting down at least to the valley area high of this zone, regardless if it's going to be bullish later on or not. This is like a classic move at the 0.88 back down to the golden pocket, to again rally up or move down. But 93.3k is a juicy one. It is a juicy one. Anything in between, I'm not interested. Anything in between the levels, I'm not interested. It's either 92.3k or 92.3, yeah, or 93.3. It's one of those two levels that I would be interested in executing the short. No nonsense of shorting, adding to the shorts. Okay, so those are the two main levels that I would be interested, and just being aware, of course, that the price might just want to take out 95k in the next couple of days, right? Maybe. So yeah, it's without a doubt interesting to possibly get into those trades on the rejection. And long positions, I would only be interested in a long, guys. Not interested in a long here, for goodness sake. Only on a pullback to the CME gap. Only if we do fill that CME gap, which eventually is going to open here with a gap that's looking something like something like this. Where's the price now? Yeah, price is literally yeah, price is on the CME. Price is literally trading here at 92.3. So we might see the price opening somewhere in this region if we're still going to consolidate here throughout the next coming hours. So we do have that gap. We do have a little bit of a gap. So I would treat the fill of the gap as a possible long trade here. So that's going to be looking interesting in the next coming hours. Let's see how we open Monday. So let's take a look at some anchored VWAPs from the low here, from the recent lows. Anchored VWAP from these pivots are coming in quite low, actually. Yeah, they're a little bit too low. Fill the gap and maybe get a bounce. That's going to be the only option for a new long position. I'm not interested in looking at longs here, just purely based on risk management. I like to have tight stop losses, but I understand that, entering longs here, I would want to see that CME gap filled to get into a new long position, get a longer pullback from a rejection from a high. I want to see a decent pullback down if I want to join a long position. So yeah, no major longs to be taken here. It's just the main reason is risk management, right? If I wanted to enter along here, yeah, I tell you what, if you're feeling a little bit brave, you got a little fair value gap here. You got a bit of the range lows, range highs at the moment here in this zone. A little bit of a fair value gap. Maybe, and only maybe, reaction at the lows here of the range, sitting at 91k. Would I consider a possible fake out of the lows and then recovery back to the highs as a day trade, right? Only because these do happen quite often. They do happen, right? You get a nice little gap, fair value gap right there, a little bit of a range, And price likes to sweep up the lows of the range and then get a pump to the upside. So only if it does get a reaction, would consider that long, maybe stop loss here, and look for the recovery all the way back up to the highs. Only if the reaction is met, okay, at the lows of the range. Let's talk about Elliott wave theory, even though maybe a lot of people would say, nah, don't want to talk about Elliott wave theory, especially when you're coming up with those WXYs, sideways corrections that nobody gives a damn, nobody understands. We have to, guys, we definitely have to. So let me go through the comment section and see what's going on here. And shout out to Alex O Crypto. Oh, the gang here. Let's go. Gang. I'm learning to swing trade better from you. Alex O Crypto, what a legend. Thank you very much, my man. Much love to you, my man. Andy, are you in any position? Yeah. Attempting the short, I have to say. Attempting the short at the rejection, guys. Look, the entry is exactly at the point of control. When you take a look at the range point of control, guys, I only get into the short based on what I say. Right? So we have the point of control of the zone, right? Value area high, if you wish. Value area high is actually a little bit higher, so let's get that out of the way. But yeah, literally the point of control of this range. And when we zoom in, it's literally, the rejection point of the point of control. So my entry, as you can see, it's just literally there. It's literally at the rejection. So I'm not shorting higher. As we get the rejections, I'm happy to enter the short. 91, just under 91.5, which is just slightly under the range point of control. Tight stop loss, and the main reason why my stop loss is not here is because I understand that if we take out this high, I want to save some money here. I realize that by this moment, with the information that we have today, Sunday, if this takes out this high, there is just a very, very good chance that we're going to take out this one. So, that's basically with my risk management. But yeah, my entry is literally here. Literally here. Or just under the point of control. Or at the point of control, if you wish. It is reacting. It is moving, but it's consolidating. It's a bull flag. It's a rejection. It's a resistance area where the price could pull back. That's what I know. So, and if we do take out this high, I'm not going to be interested in being in that short. If we do manage to take out this high, then we have a bit of a three-wave corrective structure. And you just have whatever happens here next, you just have a good chance that you're going to take out this high. So, yeah, that's a little bit of what I'm looking at the moment. So plan is this one for me, if I'm awake, is either look for the double top. If we do not double top, remember, my entry is not at the wick highs. This is stop loss and a take profit from the long to hedge against my short. But literally, I'm shorting here. I'm not shorting, on the movement up. There's no shorts here. No shorts here. I need the rejection. This is with the rejection is where I decide I want to get into the short. Back test is fine for a short. We always talk about a back test of a major level. It just happens a lot, right? Where you reject from the certain level, which could be the point of control, and then we back test it, right? Or kind of fake back test, right? So you got this double top, which is cheeky, and then the back test. Back tests are always possible entry zones if you do not enter on the double top here in this case. So yeah, let's see. Managing risk very, very well as always, guys. That's what we do here. Anyway, let's go through the comment section, see what's going on. You wait for the false move either way. They are not the most easy day to trade. They are not the most easy day to trade. Brother, I'm back. Tennis ASAP. Crypto by Mattia. Much love to you, my man. Yeah, let's get tennis cracking here as ASAP. Let's get tennis cracking. I do tennis. I play tennis with Crypto by Mattia, CBM, guys. Go and check out his channel. Great content every day on his channel, guys. Crypto by Mattia. And I do play tennis with him here in Dubai. We are amateurs trying to be professional tennis players. A little bit too late for that, but we have a good time. The range between 98 and 105k will be great bull trap. Let's talk about that right away. And by the way, guys, if you are interested in trading, Bluffin is an awesome platform, highly liquid. You got the greatest bonuses down below. Okay, you do have a $1,000 deposit bonus. If you deposit 7k, you're getting $1,000 on top of your trading funds. If you deposit 5k, you get 750, and this adds up to your capital. Okay, check out the link down below. You got also Velto, which is a decentralized platform. They have very competitive fees, guys. 0.02 take a fee on Velto, and you got a little tutorial as soon as you click that link down below. There's a little tutorial on how to connect your wallet. You can connect MetaMask, Ledger, you know, many different wallets, and you have full custody of your funds, right? Anybody that doesn't want to deposit on a centralized exchange, Velto is a great alternative. So range high 90, somebody was saying 98k to 105k is a perfect bull trap area. When we consider the higher time frame, it eventually is. I'm not expecting the price to go very far away, I have to say. Still in the range. I see this as a very trappy environment, guys. If we would have claimed the lows or these recent lows, I'm not a fan of seeing a major breakdown or a major break up. I think the market is going to be very trappy still in this range because there's no major bearish case scenario or major bullish case scenario, I have to say. If I'm looking at something very bullish, I need to fit in here a leading contracting diagonal from this low as a wave one. And the problem with this leading contracting diagonal is, you know, very low probability. It doesn't usually happen, but obviously it does once in a while. Will this be the time it does? Maybe it is. The problem with this leading contracting diagonal, ending diagonal is by far most common, which ends up in a C wave, right? Or ends up in a fifth wave, right? Ending diagonal, and then you reverse. Leading diagonal in your wave one is very rare, very rare to start a very bullish structure, breakout in a wave three, right? Leading diagonal wave one. So not only that, your wave three and your wave five they're very different. This is a very impulsive move on your wave three, and this is a very three wavy structure, and it can only be 5, 5 and 5 followed by 3 waves on your wave 2 and your wave 4, or only develop all of them by 3 waves, 3 3 3 3 3. And that is not the case with this one. This looks very classic impulse to the upside. So there's definitely a problem here with this leading diagonal, which just by its own is rare to start a bullish structure, right? And get a massive wave 3 to follow in the next coming week. So, which tells me that, you know, we're likely still continuing a large correction. That does not mean that we could take out 95k, you know, absolutely. I'm just talking about getting the market to be very bullish in the next coming week. So overall, continuing the large range with the potential of taking out 95k, absolutely, but just not expecting continuation massively to the upside. So regardless the bearish case, we had a very, very similar scenario with the bearish case, which this would have to be the end of a WXY double zigzag, which you have a zigzag here, correction, and another zigzag here, finishing, right? That's the last lower high. People that were bearish, this is a bear flag, it's just going to break down, we're downtrending. Probabilities were decreasing for this already, just because it's just extending in time quite a lot, and also hitting the top of the resistance channel. And this is pretty good for probabilities looking at Elliott wave. I've explained this the other day, where from your wave 1 and 2, you get a channel from the start of wave 1 to the end of wave 1 to the end of wave 2 here. And your wave 3 usually gets out of the base channel, the lower part of the channel. And the wave 4 usually gets resistance in between the lower part and the center of the channel, and then moves down. And that was not the case throughout the last few weeks. So you're like losing time here for the wave 5 to develop. So yeah, so it's not looking extremely great for the bearish case to move down below 80k in a wave 5, and it's not looking great for the bullish case to break up in a wave 3. So you're like, well, what the heck is going on? It's just a complex correction. And it's you know, that means eventually that what could be on the development here is a 3-wave move down, which is already good to expect new all-time highs to be hit again on Bitcoin, you know, at some point in the near future, regardless if it's going to be in 4 months or in 8 months. You know, this is the 4-hourly time frame, and this could form a way longer corrective range that it's not going anywhere, right? We're literally moving up here, we're moving down here, we're moving back. You know, it's just gonna, it looks like that Bitcoin is not going to break down to 40k, or it's going to move up to all-time high. Even all-time high would have higher probability in this case, because what is very, very likely that is the movement down is not an impulse. We are failing in the wave 4 and wave 5 here. Price is failing to actually form a 4 and a 5. And as it's failing to form a 4 and 5 based on time and hitting the top of the channel, then the conclusion is that we're just in a very long, potential long correction. But however, the most bullish scenario is that this is a 3-wave correction here, and this ends up being more bullish than we think, right? And it actually breaks up in a wave 3, you know, wave 4, 5 correction, and you know, then we would expect all-time high maybe in 2026. But overall, the bears are losing. With the momentum that we got in the last few weeks, bears are losing. Bears are losing the battle here to literally continue very, very strongly in an impulse. So on the higher time frame, we just look for an extended range. This extended range can be very, very trappy. Of course. There's multiple scenarios. I was coming to the conclusion on, and this was a possibility, of course, last week. Throughout the middle of the week, where we could have formed your wave X here in a triangle, and your E wave formed a triangle as well, which is not common to see, I have to say. Very, very rare that you do see this, and I would say that maybe this has been the case where you formed an E wave triangle inside of the larger E wave. Not very, very common. You would even see that this is not a rule on Elliott wave. You know, we would say you can't form a triangle inside of a triangle. You actually can, only on the E wave, but it's very, very rare to happen. But it kind of fits in nicely, because if you do get the last lower high, this is a running triangle. Of course, you have the movement down. B wave takes out the highs of the A wave, C, D, and then here you have 5 waves, which is also squeezing in a triangle. You know, it's very, you know, we did finish a 5-wave move here. Obviously that's finishing in an X wave. What could this develop? That's the thing, you know, what could develop here in the Y wave? When we use a little bit of more technical analysis, obviously we have the value area high of the range. We have the yearly level, right? We have specific levels here where the price could reject. And if it does reject at one of these specific levels, we're already at the point of control of this range right over here, as explained at the beginning of the stream, right? Where it's, hang on a minute, let me just get this value area out of the way, right? This point of control. So we are at resistance. When we consider Elliott wave theory, how could this Y wave develop, right? What scenarios do we have on the Y wave? I understand that this Y wave could literally form a zigzag, wave A, zigzag down, wave B, and then a impulsive move to the upside to finish your wave Y. Now, then obviously we would expect the range to either continue, but even slightly to the downside. So more downside later would be expected. You have the potential of taking out 95k, of course. But this would be a little bit of a trappy situation where you're getting above the range highs of the last 2 weeks and getting down to the range lows of the last 2 weeks just to squeeze out the shorters, squeeze out the longers, and then go back up. So, I mean, this is why looking for shorts in this zone at resistance, value area high, point of control, I'm going to attempt it, guys. I'm attempting it with very, very good risk management, as you can see. So yeah, you know, it's worth the attempt. It's worth the double tops. It's worth looking at these specific levels, point of control, yearly level, you know, to consider that, you know, entry of the short, because I understand that we could come down to below 87k to sweep up those higher lows of the last 2 weeks. So yeah, I mean, it's sensible to look for shorts at resistance. Understanding Elliott wave theory as well on certain patterns on how they could develop. So, you know, just manage risk accordingly, guys. What can I say? Well, how can this Y wave also develop? Well, it could develop with a zigzag move. I don't see this movement to the upside too impulsive, if I'm honest. You know, let me just take a look here at the 1 hourly chart on Bitcoin. Extremely choppy, extremely not the greatest, but yeah, I mean, yeah. Yeah, I mean, just because we had the highest amount of volume on Friday, could I say that this is a bit of a 5-waver? Bit of volatility here in the middle with the highest amount of volume. The Y wave could be a zigzag as well. So the price could reject in this region. It could form a corrective structure and then pop out again in a 5-wave move up. So what we're looking at here is a zigzag, just like a zigzag here in your wave W, just a 3-wave structure here. Also a 3-wave structure here that, you know, takes out 95k high of the range, and, you know, obviously maybe look for slightly higher levels. Just want to check here if there is any. There's a weekly naked point of control at 95.8k. I mean, this is from this range over here. It's actually a really, really nice level here. Depending on how we get up there in the next coming days, this taking out these highs. Of course, so many people are going to attempt a short here at 94.5. I'm telling you, I don't think it's going to be that easy. I would be looking at the impulse, looking at the 5th wave structure to detect that rollover. More at the weekly naked point of control at 95.8. we're gonna go live, guys. Tomorrow is Monday, so we're doing the 3-4 hour live streams, looking for intraday setups and looking for entries as well for what could happen in the week. So make sure to subscribe if you're new. We do Monday to Friday New York Open, and we're looking for 3 to 4 hours of streaming, looking for entries, intraday setups, okay, regardless long or short, okay. Scalping scenarios also will be looked for on stream Monday to Friday. We're going to keep those long live streams so we can actually do live trading, okay. So if you're new, make sure to subscribe. That's what we do. So yeah, anyway, going back through this scenario, the most bullish one, I have to say, which I'm not a fan of, is leading diagonal right over here, and you have 1, 2, 3, 4, 5. This is your wave 1. This correction, your wave 2. It just looks incredibly horrible, but you know, we have to consider it. This would have to be something bullish, and this a complex sideways correction, which is, you know, 3-4 times longer than your wave 1, and now you're developing your wave 3. You know, just as long as the momentum is bullish and we break resistance, well, why not, right? Why not the bullish case? Why not? This might go to 100k plus, right? I don't think it's going to happen, but you know, I need to be aware that, hey, maybe it could happen, and you just need to be aware of it. So you want to be cautious on your entry points on the shorts, right? So I'm not a fan of that. It just looks incredibly terrible for this to be a wave 1, 2, 1, 2, you know, and you're just gonna pop out here in the next 1 to 2 weeks and go to 100k plus. I don't see that happening. I don't see this happening, guys, like very aggressively, but it could. But it's not the highest probability, let's leave it that way. Based on the leading diagonal, this to be something impulsive from this low, holy smokes. I would rather see this as a 3-wave structure or the end of the triangle here, and what you're forming here is going to be a little bit of fakey out scenarios. So I would be a little bit cautious on extreme bullishness in this zone. Of course, having longs from lower, you definitely want to leave some open eventually. If you have any longs from, I don't know, maybe you have longs from here, or maybe from Friday, right? Definitely leave some open just in case, to have some exposure on the break of resistance and actually maybe getting above 95k. So definitely want to leave some open on the longs. So yeah, when we consider Elliott wave theory, there's a few tricky scenarios. I'm aware of a zigzag move here throughout the next 1 to 2 weeks, and I'm aware of a flat takes out the lows and the highs of the range. That could be a very interesting one as well. Everybody's going to be like, what the heck's going on? Still just continuing the range. But, I mean, this is why this zone where we at, it is resistance. It is worth the attempt. It is worth the attempt. But yeah, this consolidation is getting a little bit on my nerves at the moment. It is Sunday. Yeah, look, it does look like it wants to pop up. No selling pressure. Preferably we don't take out this high right there, because if we do, we're just so close. If we take out this lower high, likely going to take out this high, and then we're going to have to go from there. Do we break it, or do we double top and then we get the larger pullback? If we break the highs, next major level is the point of control at 92.3k. Next level of interest, no trade zone. This area between 91.8 and 92.3 is a no trade zone for me, at least anyway. So it would either be double top or naked point of control, or the CME gap for a long. Don't want a long here. Not interested in a new long here. Where we at the moment? We'd have to get down to the CME, fill the gap, maybe look for a long after filling the gap here. We'll see how we open on Monday. So yeah, that's a little bit it, guys. Other scenarios considering Elliott wave theory. Other scenarios. I mean, the bullish one, I'm not a fan of. Three wave up, flat here. And the WX, three wave up in a zigzag, flat in wave X. Zigzag up here, zigzag down, and then an impulse up to form your Y wave. So that would be another flat here, also possible, but it's very similar to the triangle one. So I would be looking as well for this to maybe reject in this area. Yeah, there's a few scenarios when we consider Elliott wave theory based on a complex sideways WXY, regardless if it is this scenario where you have a zigzag flat in X and just a larger flat here in your wave Y. There are a few scenarios. Yeah, this is a lot of the scenarios point out that a rejection here before taking out 94.5k is possible, just to sweep up the higher lows. Just want to be aware about the bullish case scenario, of course, which is contracting diagonal correction wave 1, 2, you know, and obviously, you know, just continuing to the upside here. Regardless if it's that one or the triangle, which the Y wave has an internal flat here as well. So a few scenarios do point out on a rejection in this area and sweep the lows. So just have a plan, right? Trade the levels. There are some guidance levels as explained. I take these levels as guidance, guys, and I am totally transparent about it. Show the trades. We do Monday to Friday, regardless if we reject or not from these levels. They are good entries and they provide good risk management. So yeah, it's a little bit it. Next two major levels to attempt this possible short, guys. If we move up to 91 to 92k, guys, I will not be in the short. I won't be in the short position here. I'm not adding to the short. I'm not doing any of that BS, guys. I'm getting stopped out here of this short entry. A tiny stop loss. No BS here. No adding to shorts or any of that nonsense, guys. If we double top, I might attempt the short again. So yeah, we're gonna have to see. We're gonna have to see here how the week develops. Much love to everybody. You think dump because of Venezuela? Yeah, I mean, I'm not sure if that question is for me or for somebody else in the comment section. I want it to come down. Yeah, I mean, me too. I would be happy for it to come down. You know, I'm happy to attempt the short here. Yeah, or attempt it at the double top. It doesn't matter. Don't be shorting and adding to shorts here, guys. You know, there is that risk eventually of moving up. We are moving up bullishly. It is resistance. That is the problem of trying to catch highs at resistance. They give you the best risk to reward. I really like catching these resistant shorts because my stop losses are, you know, very tight. With the information that is provided, I can lower my stop loss, lower the risk, just understanding if this recent lower high is taken, it will likely convert this into a three-wave structure. Of course, there is the flat potential. That would be cheeky, but I would be willing to not participate in the short if that is the case. So yeah, it's just level to level as we do get this information. And you know, the problem is, right, you know, wait for a sign of weakness to get into the short, right? You know, this is the thing about trading, which is there's only two ways in getting into a trade. You either short the exact resistance level with a failed breakout, which is this case. You know, this is a reaction. This is, you know, this is how you know, if the price decides here to roll over, then, you know, where do you get into the short? I'm not a fan of shorting like, oh, it's breaking now the local market structure, I'm getting into the short. No, you know, you need a strong move down in an impulse, in a corrective structure up, bear flag if you wish, to consider then the continuation down. And it's you either enter the short at resistance or you enter the short after a proper sign of weakness. But after the proper sign of weakness in an impulse, you need the bounce, right? You want to get into the bounce. So I only have two options here. I either short the Pico top attempt with good risk, or I wait for that, you know, impulsive move down, which, you know, in this case, it would have to be 1 2 1 2 bam 3 4 5 4 5, right? And then you get the bounce. Lots of overlap here. This does not look bullish. And then obviously attempt the shorts here on the bounce, right? So yeah, I mean, that's the thing, you know, that's the only way on when we're looking at higher time frame. Okay, when you're scalping, you can get into VWAP, you can get into, you know, range low SFP, you can get, you know, when you're scalping, you can use so many different strategies, but scalping is for movements of, you know, $3, $4, $500, $600. We are trying to look for the slightly bigger moves of $2,000, $3,000, right? Maybe even more than that. Not interested in little scalps. Okay, we're interested in actually looking for that bigger move if possible. And yeah, that's what we do, right? So can I long at 88k? You all had your chance to get in. It's time to fly. Ain't got time for a bear market. To the moon. Yeah. I won't long or short at the moment. I will be staying out. Thanks for replying my message. Can I long it at 88k? Can we long at 88k? 88k. We got a weekly naked point of control down at 88. Yeah, just below 88k, 87.8k to be more exact. I have to say, look, we got the CME gap as well. CME gap, if it is filled on Monday morning, which is in a few hours from now, if we decide to roll over, I would say that you just need to watch exactly the CME futures chart. Okay, watch the BTC1 chart to see if it is filled, because it could give you that. Right now, the price action of Bitcoin on the CME is at around about 92.3. Of course, the market is closed, but that's where it's going to open if we still consolidate here for a few hours in this region. So if we decide to roll over Monday morning, pay attention to the gap fill. Because it does provide support, right? Gaps do provide support. So this is the thing. Maybe the price looks like it's going to roll over. We end up forming bullish CVD divergence on the CVD, right? We end up forming lower lows on CVD and still higher lows on price action. And fill the gap, lots of shorts entering, and then just get a major bounce after filling that CME gap, which is, you know, something that we need to. I would consider, depending on where we are at tomorrow morning, if we come down to the gap, because this is like longing on Friday. You know, the pullback down on Friday, there was something about that pullback on Friday that was interesting to long, right? I entered into that long position on this pullback on New York Open, right? Round about New York Open. And it just felt right. Yes, we double topped, but big wick up, big move down. You know, you had a chance to long throughout the last 2 days, and maybe the price, as mentioned, you know, the price is uptrending. If it does get a pullback, the gap is a decent level of support. You know, when we take a look at the history after filling the gaps, most of the times gaps provide support. The question is, after the support, does it form a lower high because you move down impulsively and you roll over, you break the gap eventually, or you get a bounce and you recover to take out the highs again? But gaps are usually very, very good levels, but you need to fill it, and obviously you want to look to get in at the exact lows after filling the gap, of course, right? If market opens in this region, right? Say market opens here Monday morning, you come down, you fill the gap, you want to literally enter very, very low, stop loss, potential target of the high. You want to literally enter at the low of the gap, right? So, I mean, I have to say it's a valid level of support to maybe look for the long. So it could be interesting if it does come down there, because then, as mentioned, right, what if the price continues this uptrend structure? I have to say, maybe it continues the uptrend structure and it actually gets supported at the gap. So there are opportunities to get in still. Not only shorts, even the shorts are looking attractive, right, for a bigger pullback. But I have to say, jumping into a long position still in bullish market structure. Will we get the gap filled or not? I have to say, you know, there's no reasons in filling the gap on Monday. We might just pop out, and the gap, we're going to leave the gap till next week maybe to get filled, right? And we go to higher levels first. But just in case it does come down, right? It's just good support. Just be ready for it. Be ready for the gap. If it comes down and fills it, you got to set up. You got good risk management. If it doesn't come down there, then there's no long trade, right? What can we say? It's just a level to be ready for. Watch which platform, bro. Trading. Which indicator you're using for the point of control in your chart? For the point of controls, I mean, you can use literally the fixed volume profile. Fixed volume profile is like the way to do it. Simple way to get naked point of controls from ranges. Okay. Fixed volume profile to get high volume nodes. Obviously, you can use Atus as well, but Atus, you know, I'm not sure if it is free for crypto anymore. But Atus is also where you can get your naked point of controls. A little bit more accurate than with the fixed volume profile, if I'm honest. Not much more, guys. Complex range, we are at the highs of the range above 90k at the moment. We are getting the resistance. You know, it is getting a reaction, as we can see on the chart. I am attempting the short, guys. Entry is a couple of $100, not even that, above. You can see we're just very, very close to my entry. I'm not gonna risking small amount here. Small amount. You know, this right now would be a 600 loss. If it ends up reversing and breaking down, then, you know, eventually we are looking at big amounts, right? If we were to come down back to, say $90,000, right? It's a 10 to 1 risk to reward here at the moment where my stop loss is. 10K for 600K, even more than that, right? 15 to 1. I would attempt again the double top. I can manage a $600 loss, $700 loss. I can manage another $700 loss. When we get that movement down, this is going to pay my stop loss by a lot. So, just this is the next level where I would attempt, as I explained, it's either double top or it's the point of control at 92.3K, or it's the yearly level as well, which is with the 0.88 Fibonacci. And these are for bigger moves. These are for bigger rejections, right? I want to get into the big rejection. I'm not looking at small little movements in this zone. I want the bigger move. I'm in for the big move. This is why the stop loss is very, very small, right? What can we say? Legends, remember, if you are interested in trading, bluffing, I will be updating you this week, potentially by the end of the week, with the new product. Remember, if you do sign up with the link down below, you are getting a bonus with the new product that is going to be launched. Okay, you can sign up to bluffing or to Velto. Velto, also a great decentralized platform. You get the biggest bonuses available. Bluffing, BTCC, weeks. They only require an email and a password, and you got the greatest bonuses available. I will be leaving my Telegram DM down below in the next coming days for the new product that we are launching, which is going to be including more setups. That's what the people want. People want setups. They like the education, they like the analysis, they like the projections, the levels, but people want setups. People don't have time to educate. There's a big chunk that they do, but a lot of people want setups, and that is coming with the new product that we are launching basically this at the beginning of this month, right? Hopefully we do have it by the end of the year. And whoever signs up with the link down below to either bluffing, I'll be leaving the Telegram down below in the next coming days. You're basically getting a bonus, okay, and also massive discount. We got the links down below. BTC Golden Cross. Oh, don't say that to me. Don't say that to me. So you are a bullish bear. Absolutely. We look for longs and shorts. Short squeeze tonight. Very possible. Very possible. We've already got some liquidations here. Okay. We already got a little bit of a pump. Could this pump continue? Absolutely. Stay cautious. Stay defensive at certain levels. You got possible entries. Stay defensive, legends, on your trades. Be a master at risk management. Okay. Much love to everybody. Thank you very much for joining. Tomorrow we are back Monday with the long live streams. We'll be looking for scalp setups as well, because that's what we need to do. Okay. We also look for intraday setups, which is Monday to Friday at New York Open long live streams. Thank you very much for joining, legends, and I'll see you tomorrow.